It will happen when the powers that be deem it appropriate. And if BlackRock really, really wants it to happen, it'll happen.
Yeah, or maybe
because I think they have a bigger stick. I think they do have a bigger stick.
Hey guys, welcome back to Everyday Finance. In this video, Yusko discusses the BlackRock and crypto. According to Yusko, it will occur when the relevant authorities consider it suitable, and if BlackRock truly desires it. If BlackRock intends it to happen, their superior influence will make it happen. They do possess a greater advantage than given the current chairman's position, and the fact that the current administration appointed him, it seems highly unlikely that any changes will occur before the election, as he will do whatever it takes to maintain his position. If there were to be a change in the administration in November, how swiftly would they likely replace the SEC chairman? What is Yusko's opinion on the matter, and how fast does he tend to form his thoughts? The ETF is a top priority, or perhaps even the lowest priority, according to Yusko's perspective on their plans. We have observed a net inflow of around $12 billion over the past 8 weeks. Yusko believes that this trend can and will continue. We anticipate an acceleration rather than a slowdown. Indeed, the reason for this is that we have not yet secured all the necessary wirehouses and advisors maintain independence with complete endorsement from the ETFs, but further education remains necessary. There are resources available to help navigate the current market volatility, as discussed by Yusko. It's interesting to note that this pattern occurs right after Chinese New Year, specifically in 3 out of 4 years in the cycle. Instead of focusing on the years with negative returns, let's shift our attention to the 3 years of positive growth, where you experience 2 periods of drawdown. There were declines in the first half of the year, with one occurring around Lunar New Year, and lots of things Yusko discussed, so please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
Gonna do.
Yeah.
They are the largest asset manager in the world. I told people for a year, there was no question in my mind. As soon as they announced they were going after the Bitcoin ETF, not only was it going to get approved, they were going to be first. Right. Now, they decided to crown them all at the same time, but and look, Bitcoin has, BlackRock has applied for an ETF in Ethereum as well. I think the challenge now is who has the bigger, stick, shall we say, and everything is political. Appointments of these, unelected people are by the current administration that happens to appoint them. It happens to be an election year. So look, Ms. Warren is pretty anti all of this. Why? Well, my thesis, I won't put words in her mouth, but my thesis is you look at her largest campaign contributors, they happen to be large financial institutions that have a great deal at stake if they are disrupted. So it's not surprising to me that she would craft legislation to slow down the disruptive technology. Okay, the fact that it's an election year and that she's look, show me who said it, show me the incentive, I'll show you the outcome.
There you go.
That is the way the world has always worked. And here's the problem, political problem, as I see it. It costs, from what I've read and studied, about $100 million to secure a Senate seat in the United States. $100 million. Most of us don't have that. So if we want to run, unless your name is Meg Whitman, who spent $103 million or $108 million, I can't remember, of her own money.
Yeah.
She lost, unfortunately, but she spent over $100 million of her own money. Unless you're her or someone like her, you have to raise $100 million. Well, it turns out if people write you $1, $10, $20, $50 million checks, Paul, they expect something.
Yep.
And that's the way our system works in a world where you allow unlimited contributions to, PACs and super PACs. So either fix campaign finance and make people so they're not on the payroll of special interests, or do term limits like the old days, right? And when the founders the framers set it up, 2 years, you left the farm, you went, you served, and then you went back. You didn't stay for 6 or 8 or 10 or 50. You stayed for 2. And maybe 2's too short. Maybe we need 4 or 6. I don't know what the right number is, but it didn't 20, it didn't 40, and it didn't 50.
Yeah, lifetime.
And there's also,
scenarios.
It's also vitality, right? When are you the most vital? When are you the most, I hate to say it, but I watched some speeches of our current president when he was 35. I'm like, yeah, right on. I agree with you.
BlackRock, being the largest asset manager in the world, will continue to operate according to its own strategies. Mark Yusko has been confidently stating this for a year, leaving no doubt in his mind. They made an announcement about pursuing the Bitcoin ETF. It was not only going to get approved, but they were going to be the first ones. Now you understand the simultaneous crowning decision, and interestingly, Bitcoin has caught the attention of Yusko, while BlackRock has made a move by applying for an ETF in Ethereum. It seems that the current focus is on asserting dominance, and the allocation of positions is driven by political factors. It's worth noting that certain individuals in positions of power are not elected but rather appointed by the current administration. This is particularly relevant as it is an election year. Well, let's take a closer look. M. Warren seems to strongly oppose all of this for some reason. He seems to have formed a conclusion based on his own assumptions, but his argument is that, if you examine her closely, the largest campaign contributors happen to be large financial institutions with a lot at stake if they are disrupted, so it's not surprising. It's quite surprising that she would propose legislation to impede the progress of such disruptive technology, especially considering it's an election year. Let's back to the Mark Yusko interview video.
Yes and yes. So I definitely think it can continue. I think we've seen 12-ish billion of net inflow over the 8 weeks or so. I think that absolutely can and will continue. Do I think it is likely to accelerate, not decelerate? Yeah. And the reason is we still don't have all of the wirehouses and independents with full approval of the ETFs for their advisors. We still don't have all the education resources. There's going to be volatility, right? I think the volatility that we're experiencing now, talked about this, right after Chinese New Year, every year after a big year. So 3 out of 4 years in the cycle, so not on the down years, but on the 3 up years, you get 2 drawdowns in the first half of the year. One around Lunar New Year, because people in China need to cash out to fill up their red envelopes with cash, with renminbi. And that happens like clockwork, and it's a big place. Second is around tax time for the US. So kind of, Ides of March through the first week of April, as people realize, oh, geez, I got to pay taxes on all that crypto that I traded last year because it was up, 155%. And there's natural selling. And so that in the short run swamps the inflows. You got the added challenge that GBTC made a decision, which I don't fault them for in terms of being money grabbers. You got a captive audience, most of which came in at 6, 8, 10 grand Bitcoin. So they have huge capital gains. If they sell, they're going to incur big taxes. So it was highly unlikely they were going to sell right away just to save 100 basis points. But if it was in a not-for-profit account, an IRA, a retirement account, those were going to get sold. And that was bang, 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 the first few weeks of withdrawals. Now there's some arbitrage going on out there that people don't pay attention to. Interesting thing is financialization of this market is good in so many ways, right? I said all along, if the only purpose of Bitcoin is to put it on your ledger and bury it in your backyard, we can all go back to our day jobs because we have that.
Sure.
That's called gold. And it's been good for 5,000 years. But what people don't think about is that gold isn't just the few bars or coins that you stuff in your safe at your house as running money. It is the base layer of money. Every central bank in the world owns it. They issue currency on top of it. Mm-hmm. And the same thing about Bitcoin. If Bitcoin wants to be digital gold, digital property, right, eventually take on real estate as the great store of value, then it needs to be deposited. It needs to be lent out. It needs to be borrowed against. It needs to be financialized, meaning people can borrow against it. They can decide if they want to rehypothecate it or not. We need rules and regulations like the banking industry has. So the future of finance should look like the past of finance, and violators like Bear Stearns and Lehman and others should go bust, and we shouldn't bail them out, by the way. But so ultimately, we are on the right path and the right trajectory, but it's never a straight line with no bumps or hiccups. You know this because you've been on the street a long time. If you want to acquire a large amount of an asset, the oldest trick in the book is you don't just start buying it. You actually go short some.
Mm-hmm. Yep.
In fact, you spread a rumor saying you hate that asset and you push the price down so you can buy it at a cheaper price.
Yeah.
And whether it's George Soros or Julian Robertson or Paul Tudor Jones or Goldman Sachs, that's been done for centuries.
Sure.
And so this idea that somehow, as soon as the ETFs were approved, we're going to be up only, and there was going to be none of, because look, if $1 billion comes into the ETFs today, and I don't know if that'll be the right number or the wrong number, but let's call it 500 million. 500 million comes in, and a bunch of it goes to IBIT, the BlackRock. They, at $359 today, will, they'll set the price for their ETF, and then they have to go acquire X Bitcoin, however that is. The problem is only 900 Bitcoin get created today. If they got to go buy 1,000 Bitcoin, that's more than 900. So they got to go convince someone to buy it.
According to Mark Yusko, with the added challenge of GBTC making a decision, it becomes difficult to navigate the short-term inflows. Mark Yusko does not fault them for this. It seems that you have a captive audience, with many individuals joining at an early stage. With a significant investment in Bitcoin, selling now would result in substantial capital gains and subsequent tax liabilities. It seemed improbable that they would sell immediately just to save 100 basis points, especially if it was for a not-for-profit organization. There was an IRA retirement account that was going to be sold, and it caused quite a stir in the first few weeks. Withdrawals. There's some interesting arbitrage happening out there that people often overlook. The financialization of this market has numerous benefits, doesn't it? Yusko has consistently emphasized that if the sole intention behind Bitcoin is to store it on your ledger and keep it untouched in your backyard, we can all return to our day jobs as we possess something valuable that has proven its worth over 5,000 years. Over the years, it's important to consider that gold encompasses more than just a few bars or coins that you store away. As a financial analyst, it's important to note that running money serves as the foundation of every central bank's currency reserves. Central banks worldwide hold it as a safe asset. If currency is at the forefront of your mind, then the same applies to Bitcoin. Bitcoin aims to become digital gold, digital property, and even venture into the realm of real estate. We must deposit, lend out, and borrow against something that is considered a reliable store of value. Understand the concept of financialization, where individuals have the ability to borrow against their assets and make decisions regarding rehypothecation, similar to the practices seen in the banking industry. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.